Now, before we get to our guests, very quickly, Donald Trump says that 25% tariffs on Mexican and Canadian imports will start today with no room for delay. Listen in.
On the tariffs, is there any room left for Canada and Mexico to make a deal before midnight? And should we expect those Chinese tariffs, the extra 10%, to take
No room left for Mexico or for Canada. No, the tariffs, they're all set. They go into effect tomorrow. And just so you understand, vast amounts of fentanyl have poured into our country from Mexico. And as you know, also from China, where it goes to Mexico and goes to Canada. And China also had an additional 10, so it's 10 plus 10. And it comes in from Canada and it comes in from Mexico, and that's very important.
Okay, let's get an expert opinion on what could this entail for risk assets. Matt Orton, Head of Advisory Solutions and Market Strategy, Chief Market Strategist at Raymond James Investment Management. Johnathan Barratt, Chief Investment Officer, ETO Markets. Both of them join in. Gentlemen, thank you so much for joining in. Good evening, I presume, to both of you, or good morning, as the case may be. Matt, now we know that this has led to a lot of ramifications mentally. Now that it's finally happening, what kind of impact on risk assets, or are risk assets discounting some piece of the tariff effect already?
Hey, good morning, Niraj. Always great to join. And obviously, markets hate uncertainty, and I think that's where we are right now. There's uncertainty with respect to how long these tariffs might actually be implemented for. I don't think markets, whether the equity markets, currency markets, bond markets, I don't think anything has fully priced in what tariffs might look like if they are left to be implemented in the current state for a longer period of time. That being said, sentiment is nearly washed out, particularly in the U.S. equity markets. I think in Indian markets too, sentiment is incredibly low on the retail side in particular. Earnings, the actual fundamental backdrop for the market, remain very strong, particularly in the U.S. And a lot of management teams that I speak with, they're thinking about tariffs and they're factoring some of that into their expectations going forward. So while we might be seeing a little bit of economic weakening with the intersection of tariffs coming in, I still think as we let all of this play out and digest what this means for the market, there will be an opportunity on the other side of this to perhaps buy the dip that we see, but we're definitely not there yet because there's still a lot more that I think has to play out in the near term with respect to where we eventually go on the tariff front.
Johnathan, come in here. Everybody anticipated tariffs would be a bargaining tool. As things stand, it doesn't quite seem to be the case. They go into effect today. You reckon, you concur with Matt, that at the end of the tunnel, there will be a buy the dip possibility?
Oh, I tend to agree with Matt, but I guess the question is how long is that dip and how long is this going to last for? I think as Donald Trump always does, he comes out punching, and then I'm being a little bit surprised here that I haven't seen more rhetoric come from Mexico and Canada, and also China in terms of, okay, once they go into play, these tariffs, what retaliations are we actually going to see? And is the market actually looking at these? Because it seems to me that the market is just purely focused on a tariff, which eventually is inflationary down the track. That's why we're seeing the Fed hold off a little bit, because they're unsure of what's happening. Investors are unsure what's happening. But at the end of the day, if they're not coming, people aren't coming to the table to discuss these tariffs. Remember, Trump has done what he has said he will do, and he will make America great. And if that means protectionist policies, that's what he's going to put in place. The flip side of that are the problems that we're going to see once you put those tariffs in place, because the economy might slow and you'll get to that scenario where you get inflation again and the economy slowing. And I think that's where investors now are starting to turn towards and say, well, hey, hang on, this is what's happening. This is what could happen. And we could get that sort of, stagflation style of economy, which China has been trying to get away from so many years and is just finally starting to do it.
Point well made, Johnathan. Matt, coming to you on that, because the latest high-frequency data from the US seems to suggest that all is not well in terms of growth, inflation. There are worries that all of the measures that are currently being taken will have an inflationary effect. And so therefore, that stagflation bugbear is certainly something that everybody is talking about. In that context, the earnings growth that you saw in the third quarter, is that something that will be challenged, maybe not in the fourth quarter calendar year, maybe not in the first quarter this year, but maybe later on in this year, the earnings growth that you've gotten so comfortable with in the US, that doesn't pan out, and therefore you see a decline in the US?
Yeah, it's a really good point. And I think we have pulled forward a little bit of the earnings growth that's expected. And what's interesting is we've seen earnings growth expectations for the rest of 2025 actually decline more than what you would expect. You always see the analysts take down their estimates so then you can beat them again. But it's happened more than what we would have expected to see. So I certainly think there's an element of analysts and investors starting to take down perhaps some of their earnings expectations, as you might see margin or pricing power erode, given that you only have so much ability to pass through tariffs. But I think what the silver lining in the market behavior right now is the fact that you're seeing this broadening out that we've lacked for such a long time across the equity market. You're seeing that start to happen. So when you look at the earnings and break it down, it's not tech that's in the leadership position anymore. It's actually financials, which are a cyclical part of the economy, and banks in particular. And banks haven't just done well in the US, they've done incredibly well in Europe, they've done well in Japan. Earnings for banks in India have been strong too. So I look to that cyclicality of financials as well as certain pockets of industrials where you've seen strength. You've seen energy be able to beat numbers really because they're beating very, very low comps, but the consumer as well has held up, and we've seen economic deterioration a little bit, but it's really too early to say any of that is sustainable or not noise. That's why the non-farm payrolls on Friday in the US are going to be so important, because perhaps it's going to provide us a read-through as to whether we're starting to see any weakening in the US jobs market, which we really haven't seen before. There's been head fakes, but we haven't seen any sustainable movement down with respect to the ability to hire or get a new job. So when you put all of that together, the consumer still remains in a good place. And I think investors are buying parts of the market, but they're buying the intersection of growth along with favorable valuations.
And I would add to that to say that maybe we've not seen the full effect of the US government layoffs either. Johnathan, coming to you on this one, right? So do you think that, are you part of the chorus that says that maybe the call on US exceptionalism is growing a little weaker? And from that perspective, do you now start shifting into markets that have seen a major correction, a case in point, the Indian equity market?
Yeah, I think just going back a little bit on your point of the US government. Now, I think everyone sort of looks at the deficit, they phase over it. Now, I think the interesting thing here is there is an economic reality that has to come to pay. There are things that need to be done. And I think if anyone can actually do it, it's Trump. And if he's going to make America great, he's got to rein in that deficit. He's got to rein in that the government, the GDP. And you can't operate an economy at 100% of GDP where your debt is. So I do get a sense that Trump will do something to address that when we're right on sort of the non-farm payrolls. When we see results like Nvidia in terms of their revisions, you're seeing this whole market changing. Now, the question which I like to ask is, in this environment, are we going to see equities go to a record high? And the answer is no, they won't. And I think there'll be more investors looking to say, I've had a terrific run, I'm going to capture, I'm going to move. And so whilst there's mud in the waters, there's no clarity about what's happened, I think we're going to see more of a correction in the equity markets over the next quarter or two.
Matt, very, very quickly, because I understand that you have a few stocks that you're very closely watching in India. What are they right now, and when would you start buying?
Yeah, so I think in India, I've been really looking at high quality investments. And so some of the stocks at the top of my list that I bought towards the end of the fall, early holiday season last year, Bharti Airtel tops the list. I mean, second largest telecom provider, really good ability to increase free cash flow because CapEx is going to come down. You've seen good earnings and an acceleration of earnings. So I think that's a name to keep in mind, especially because it's held up well. I think on the bank side, HDFC and ICICI, which are two of my favorites, really one of my largest favorites is ICICI. Again, really good earnings. And on the private bank side within India, you've seen a lot of resiliency, the ability to help greenfield projects once they get in place, and also looking at the asset management, private banking, wealth management side of the business, which provides diversification. And finally, 197, Paytm. Financial services are doing well globally. This is a stock that has come off of its all-time highs fairly meaningfully, but hasn't totally technically broken down. So that's another name that I think if we start to see some bottoming behavior, I'd be looking to start to add positioning.
Okay. Gentlemen, thank you so much for taking the time out and being with us today. Really appreciate your time and good to get this set of views and really appreciate your time.